Hello everybody, this is Lara with your end of the week video for the S&P 500 for the trading week ending Friday 6th of August 2021. There is still a reasonably strong cluster of bearish signals from the AD line. We haven't seen that for a while, and so the main Elliott Wave count is still going to expect a pullback. Now it could just be some sideways churn to resolve this bearishness, but I'm going to go on my main daily chart with the most common structure for the fourth wave at this stage, an expanded flat. And so I expect it may continue for another 2 to 5 weeks still. For the very short term, a little bit more upward movement on Monday to 4445 before a downward swing, which may well end below 4233.13. It could also just churn sideways, and we'll look at that when we get to the daily chart. The second wave count is going to assume the trend remains the same until proven otherwise. Now normally this would be my main wave count, except for that bearishness mostly from the AD line. When we get to classic technical analysis on the daily chart, you'll see there is bearishness, but it's pretty weak really. But when we get to the AD line, you'll see it's a real cluster, which we haven't seen for a while. And so for that reason, my main wave count will expect a pullback or a big churn, and the second wave count will be bullish. The third wave count expects a bigger pullback at intermediate degree could begin. That's entirely possible, but doesn't have as much support. And finally, the fourth wave count, or the third alternate, looks at the possibility a full-on bear market may just begin without warning. And I'm only including that because it happened in March 2020 with very little warning, only a couple of weeks bearish divergence. And then we saw a big bear market. That could happen again. Now that was only the third time it's happened in nearly 100 years. If it happens again, that would be the fourth time in nearly 100 years it's happened with very little divergence between the AD line and price. So the odds for that are pretty low, but I want to consider all possibilities. At the weekly chart level, this wave count and all my wave counts see cycle wave 4 ending there and cycle wave 5 beginning. My wave count, this one, the main one, is going to see primary wave 1 within cycle 1 incomplete, unfolding as an impulse with intermediate 1, 2 and intermediate 3 incomplete, nearing an end, with minor 1, 2, 3 and 4 to complete, and then minor wave 5. Minor wave 4 may not move into wave 1 price territory below 3950.43. When it arrives, intermediate 4 may not move into intermediate 1 price territory below 3588.11. But I'd expect both of them to remain contained within this best fit channel. So in other words, to find support about the lower edge of this channel. Draw this on a weekly chart on a semi-log scale from this high to this high, plus place a parallel copy on this low. Let's take a look at the daily chart. We're going to look from 1 and 2, 1 and 2, 2 a double zigzag, 3 an impulse, looks like a pretty good impulse too, 4 may be unfolding sideways as an expanded flat. It could also be a running triangle, which would just see a sideways churn. Expanded flats are pretty common structures, and here's a really nice example. Minute wave 4 unfolded as an expanded flat. They are labelled A, B, C. They subdivide 3, 3, 5, and B is a 105% or longer of A. The common range for B is up to 1.38 times the length of A. For this example, a bigger example, 1 degree higher, A, B, C, 3, 3, 5. B is over 105% the length of A, and it's still within the common range of up to 1.38 times the length of A. B waves within expanded flats are incredibly difficult to pick, and the only reason this is the main wave count is that quite strong cluster of bearishness from the AD line. Otherwise, the second wave count would be my main wave count. That points to some weakness in this upward movement. This is led by large caps. Small and weak caps are lagging, and the AD line hasn't made a new all-time high for a couple of weeks or so now. And so that points to a reasonable amount of weakness. There's a bit of divergence with RSI, but that's also pretty weak. All of it signals a short-term pullback or some sideways churn to resolve that bearishness. If this wave count unfolds as expected, B should end early next week, and then C would be expected to move below the end of A to avoid a truncation and may bring minor 4 down to the lower edge of this Elliott channel Draw this from 1 to 3 with a copy on 2. There's an overshoot for the middle of the third wave. This is a really typical look for an Elliott Wave channel and gives us some indication it may well be drawn correctly. So look out for support if we do see a deeper pullback starting in the next couple of weeks. Minor 4 may not move into wave 1 price territory below 3950.43. Here, minor wave 3 is shorter than minor wave 1. That limits minor 5 to no longer than equality length with 3 at 670.34 points, so that minor wave 3 is not the shortest out of 1, 3 and 5, and that core Elliott Wave rule is met. At the hourly chart, here's the end of A, B and the start of C for minute wave B, 5, 3, 5, minuet wave B, a double combination, minuet wave C, an impulse, 1, 2, 3, 4, 5. It doesn't need much more upward movement to complete the structure, and the target is 4, 4, 4, 5 for minuet C to reach 0.618, the length of minuet A. When minute wave B may be complete, we should expect a big 5-wave movement down for minute C to end below 4233.13 if minor 4 is an expanded flat. It could also be a running triangle. Just a big sideways turn for a few weeks is also possible. If we do start to see some strong downward movement and have a bit more confidence in this wave count, then I'll start to chart alternate structures for minor wave 4, but not yet. We've got enough charts already, I think. It's getting a bit out of control. At the daily chart level, this is a bullish wave count because we should assume the trend remains the same until proven otherwise, and we are getting new all-time highs this week from the S&P 500. This is a base channel drawn from the start of minor 1 to the end of minor 2 with a parallel copy on the end of minor 1. You can see where those are on the daily chart. I've moved the degree of labelling here down 1 degree. What if within minor 3 this is just minute 1 and 2? This wave count is very bullish. It sees a third wave at minuet, minute, minor and intermediate degree within primary wave 1. This is possible, but at this stage, with that big cluster of bearish, well, reasonable cluster of bearish divergence between price and the AD line, it doesn't actually have a lot of support from classic analysis. It could be resolved though. We could just see more upward movement, and if we do, here are some targets for you. For minor 3 to reach 1.618, the length of 1 at 4922. For intermediate 3 to reach 1.618, the length of intermediate 1 at 5469. Within minor 3, no second wave correction may move beyond its start below 4233.13. At the hourly chart level, let's follow this because we should assume the trend remains the same until proven otherwise, which I almost always do, but in this instance that bearishness makes me give that first wave count prominence. Here's minuet 1 and 2, minuet 3, may only subdivide as an impulse, subminuet 1, 2, micro 1, 2, micro 2 may not move beyond the start of 1. Quite a big series now of overlapping first and second waves. This wave count's really quite bullish. It's expecting quite a strong push to the middle, through the middle of a third wave quite soon. Not really having a lot of support from classic analysis at this stage. At the weekly chart level, this wave count is different from the first weekly chart. The first weekly chart sees minor wave 3 only over down here and a pullback from minor 4, 1 degree lower, to commence or to continue in the next couple of weeks or so. But this weekly chart moves that possible pullback or consolidation up 1 degree and considers it as intermediate wave 4. To find support at the lower edge of this channel, draw the channel from 1 to the last high for 3 with a parallel copy on 2. Intermediate 4 may not move into intermediate 1 price territory below 3588.11. There's a bit of support from classic analysis for this view. Let's consider all possibilities, but there's more support for the main Elliott wave count. This is judged as a second alternate. And this is judged as a highly unlikely third alternate. But March 2020 began with very little bearish divergence between price and the AD line, only a couple of weeks, I think. Less than 3 weeks, and we had technically a bear market. It was a bit surprising. I don't want to be caught out again. If we see a new low below 3588.11, that would invalidate that last wave count, but to be honest, if price breaks below the lower edge of this channel, then this would become a serious contender and possibly maybe the main wave count, depending on classic technical analysis. That last weekly chart, let's pop back. I would expect intermediate 4 to remain contained within this channel. It may overshoot the channel, but if this trend line is breached with a full daily candlestick below and not touching it of downward movement, not sideways, then this would probably be the main wave count. So that's what we need for this wave count to show itself to be correct. We need to have some confidence in it before we can take it seriously. For now, it's just a what if. I wish I had considered what if back here. I don't want to be left out again. This is possible, but if it occurs, it would be only the 4th time in nearly 100 years that a technical bear market has begun with less than 4 months of bearish divergence between price and the AD line. If we had 4 months of bearish divergence, this would probably be the main wave count or a variation of it, but we don't. And so it's not. If a surprise bear market does arrive, I'd look for support about 3050.96. It'll be a second wave at primary degree to correct to the 0.618 Fibonacci ratio. I've drawn this chart on an arithmetic scale so that the Fibonacci retracements work. Primary 2 may not move beyond the start of 1 below 2191.86. That is the bottom line for all of these wave counts. Classic analysis now. How bearish is the situation this week after a couple of new all-time highs from the S&P? Upward movement, really small range week. It's pretty weak upward movement. We've seen that though before and it can be sustained. It doesn't really have support from volume, and on balance volume barely agreeing with price with a new all-time high. It's about level while price is slightly higher. There's only weak double bearish divergence now between price and RSI. I've checked RSI, this little peak here and the high for this week. We had triple bearish divergence at this peak here, but now it's just disappeared. This is the problem when divergence is this weak. It can just disappear and turn out to be nothing. And often too much weight is given to it, which it's a little bit annoying when to give it weight and when not. Well, when it's pretty clear and obvious, give it weight. When it's weak, consider both possibilities. Could it be resolved? Could it be telling us that there's a pullback or consolidation, short-term in nature because the divergence is weak? Or should we just ignore it? No, I think we should consider both possibilities. But understand it could just disappear, and if it does, then that second wave count would have more support. At this point in time, it is in existence, but it is weak. Weaker divergence would point to a more shallow consolidation or pullback. ADX is declining, telling us there's no clear trend at the weekly chart level. MACD bearish, supporting the main Elliott Wave count. ATR overall flat, normal, as price moves higher. It looks like we had a pullback here, a breakthrough, test of support, now moving up and away. The pattern this market's been in for a long time. At the daily chart level, though, there is weak quadruple bearish divergence still between price and RSI. Although we've got a new high this week, it looks like it could just be beginning to disappear. That's possible. Sometimes it just does that. Here we had short-term double bearish divergence with price, and it did lead to a reasonable pullback, still short-term in nature, and I'm only expecting something that looks like this or this to happen here. Maybe just a little bit deeper, but not too much. Still relatively short-term in nature is what I'm expecting. Volume doesn't support upward movement, but that's not a concern in current market conditions. ADX is increasing, but it's too low to indicate a trend, so a no clear trend at this stage. ATR declining as price moves higher, normal behaviour. A weak bullish signal from on-balance volume to support the second wave count, but this trend line has quite a slope and only 3 prior tests, and it's not long held, so this bullish signal is actually pretty weak. If on-balance volume turns down again, then I would redraw the resistance line and ignore this signal because of its weakness. RSI in neutral territory. MACD whipsawing, so not really giving us a clear situation at this stage, and stochastics overbought. What about breadth and volatility? Because this is where we see support for that main wave count. There's a little developing cluster of bearish divergence between the AD line and price, not enough to tell us of a fully fledged bear market, but enough to warn that the market is more vulnerable right now to a deeper or more time-consuming pullback. Something like one of these, or maybe a little bit deeper possibly, but short-term in nature, because the bearish divergence is still short-term in nature. But at the daily chart level, we haven't seen this kind of cluster of bearishness from the AD line and price for a while. The last all-time high from the AD line was back here, and prices continued higher, but the AD line has failed to make corresponding highs. This upward movement is led by large caps. Small and mid caps have been lagging for 2 to 3 months. And so this upward movement looks like the final or last stages of a bull run before we get a more time-consuming consolidation or a deeper pullback. There's over 3 years of bearish divergence between inverted VIX and price. It's proving to not be particularly helpful in timing, but for now there's also short and mid-term or longer to mid-term bearish divergence as well, supporting the idea that we may get a pullback or consolidation. And the short-term picture between inverted VIX and price, we had a couple of little bullish signals here, and now price has made new all-time highs. That may be resolved. That may have been an indicator of this last upward movement, which I'd expected for Friday. But we still have this short to mid-term bearish divergence at the daily chart level between price and inverted VIX. Now, sometimes this just disappears. It could do so again, but when it agrees with the AD line giving us bearish divergence, I will give it a little weight. I treat it kind of like a confirmation of what the AD line's doing. And so it's pretty much the AD line and inverted VIX that is still leaving me with that main Elliott Wave count that is expecting a pullback after just a little bit more upward movement early next week. And that's all for me this week with your S&P analysis. I hope that all of our members are having a most fabulous weekend.